Good morning, traders. Manny Cabrera here from MDC Trading Academy with today's forecast for today, Friday, March the 8th. Let's quickly look at our news for the day. busy morning here on Friday the 8th. We have average hourly earnings, non-farm employment rate change. We have the actual unemployment rate. We have building permits all happening before 8:30. Nothing after the bell except 10 o'clock. Fed Chairman Powell speaks at 10 o'clock, so that's way after our session, obviously long into the weekend, so we don't have to worry about that. Let's start our analysis. Remember, we're in what we call contract rollover right now. We went from our March contract, now we're trading our June contract. Again, market finding resistance at this very key level. Remember, we had a triple top there, market reacting accordingly. Remember, we talked about finding support on the 20 and or the 200. Obviously, it can also move lower into this region here. So that's kind of like what we're looking at today here. Of course, closes below the 200 SMA are very critical in the market. Remember that, these kinds of closes. But it wouldn't be the first time that this happens, guys. Remember, we had something similar happen here where the market tested, the market came down, tested a little below it, came back up, tested a little below it, and then it continued to the upside. So we're still expecting this market correction that began in early December, bottomed out at the end of December, had the recovery. And this is all typical movement. But regardless of whether the market is moving up, as day traders, we read the market like a newspaper. So we take advantage of whichever direction the market is moving. Volume has been increasing just a bit. We're still below our average of 1.1 million, although we had over 1.1 on our last full session on this contract. Now remember, these kinds of days, Thursdays and Fridays, during contract rollover, are a little tough to trade because the volume is kind of split. You have some of the volume in the new contract, some of the volume in the old contract. I personally don't trade these days for that very reason. I like to make sure that I have all variables on the table, things that I can take control of. And one of the things that I can control is to determine what I want to trade a market that doesn't have all the volume necessary in order for it to do what I wanted to do. Anyway, let's go look here at our projection chart here, and it's more of the same. Market broke below this inner area of resistance support that I had drawn, but we're still within this one. See, this is the key one here. Remember, I told you that I drew these two. I drew this inner one, which was the interim support and resistance area of this market. And then I says, if it breaks, and see I drew the arrows, it's going to either break to the upside and come test this area, or it's going to break to the downside and come test this area here. So right now, we're in the process, and that's why today we can still expect a little down movement here. Now, obviously, if this market breaks this area to the downside, then of course we're going to get another market correction. We're going to get a much deeper retracement before we end up moving higher. So that's the key area right there. Let's look at our analysis chart here, and you can see where we find ourselves today. We find ourselves between this, and this is yesterday's activity. See what I'm saying? It's very limited activity on the contract because normally what happens, people trade the early session, they trade the old contract, the March contract. In the afternoon session, they start to trade the June contract, and today they should start trading mostly the June contract. But again, there's a lot of volume that's still not decided. And here it is. That's why we have such little activity. But if you notice, it's expecting to push to the downside. This is the intraday low, intraday high. Market tends to continue to the downside when we see it break below our intraday highs and lows. Let's look at our trade chart here, and you're going to see more of the same. And there's the scene. See, we have very little activity, but the activity that we do shows like it has a potential to continue lower. Just be very careful in these kinds of trading days. Remember, the volume is still split. You have activity on both contracts. That's why, once again, you don't have all of the players available to really move the market. You understand? So that's why these kinds of days are very tricky to trade, and we don't recommend that you trade these kinds of days. But just keep your eye open. Expect these moves to the downside. Just wait for the deep retracements, and then just pull the trigger to the downside. All right? Thank you so much, and have a great weekend.